Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and I'm worn out. I'll tell you, these markets are killing you. It is Thursday, the 1st of February, 2024, and the time 5:45 p.m. Central Time. You know, I wonder, should I have stayed and paid more attention to just not wanting to carry any positions into an FOMC meeting yesterday? Here's the reason why. If you look at the stock market, had you not carried a position, you wouldn't know what happened with the big break yesterday where the market came down, and today it makes it all up and it's back up. It's like nothing happened. Are we forming a top is what I have to be wondering. When you start getting this choppiness after a 3-month rally, my experience has been that the market's gone into a distribution. I'm also watching how many IPOs are coming out. Now they're trying to raise $13 billion for a DocuSign coming out. So markets do these things at a fever pitch. You don't want to think about IPOs later as the market's in a down. You want to come out at the highs, and that's what a lot of the companies are doing. There's a rush to do this right now. Tomorrow, we're going to get a series of reports, but the big report during the day is going to be the non-farm payrolls. And they're looking for 185,000 jobs, for the unemployment to climb up a tenth to 3.8%, and for a small increase of hourly earnings of 0.3%. But they're still going up. Remember that. That is the thing that you watch. Factory order data for December. This is always a later report. They are looking for that at 9 o'clock, and they're looking for it up 0.2, whereas it was up the month before, up 2.6%. The University of Michigan, the final consumer sentiment indices will come out. They're looking for that to come out about 2 points better than the 78.8 it had at 79. But I'm telling you, the whipsaws are setting in. And when I see this happen, it makes me back away often from a market. It's as though it's like a beginner time. How do I explain it? You come out, you do what you think's right, the market knocks you out one day, comes back at you the next, and then if you get a crazy number on the jobs tomorrow, to be like, hey, why did we rally this high back? Why aren't we going down? There's other things at work that we have to pay attention to as well. So let's take a look. First, on the E-mini weekly chart, if you were up here, you are at a new all-time high close. If you finish like this tomorrow, that'll be a buzz that you hear from people. If you take a look and you tell me what's happened over the past 2 days, this is how you were the past 2 days. You came down yesterday, down 80 points in the market. Today in the S&P, you go up 58 points. I mean, if you think that's normal, shame on you. It is not normal. This is absolutely just whipping back and forth right here. And you're back to the top part of where you were when the break began. The second thing that happened, you broke trends. You now have a higher high and a lower low. Next, the break didn't carry underneath the 18-day average, so you kept the bias up but void of a trend. And the market is fighting right now at the upper Bollinger Band, another resistance point that's going somewhat sideways on you. And you did a rescue today. So you looked at this market and you saw yesterday on the close, you had a settlement, and maybe we should come back one more day. Right here. On Wednesday, you had lost the embedded reading. The only time you can get it back is the day after you lose it. It's normally done right away. That's not how today worked. It took the whole day of grinding higher and kept making higher highs where I said, darn it, it's going to be able to just barely do it. And it did. So it got it back. Notice that it closed at 80.64. And tonight, you're losing the reading again. Let me come in. You're not losing the reading. You're a little higher. It's back up higher. I knew that. I hit the button in the wrong spot. Wow. So that was what we call a bleep. And the market stays bullish with the target of the upper band unless and until the red line falters. Now, if it falters again, it's rare that you get one falter where you lose the reading, then you lose it again and it re-embeds right away on you. Very rare. I am not predicting a top now. Now I want to see what the numbers do, and I think you'd agree with me. It's going to matter how the market wants to react to the jobs report. I promise you, if that jobs report comes out like a 220,000 jobs instead of the 180 that they're looking for, the 185, that's going to be a problem. It's going to make traders realize, the Fed can only then have a February number to look at for the March meeting. They already gave you the indication they don't want to do anything. That would be the nail in the coffin. Versus, let's assume you get 170,000 job. Now the market's going to go bananas. The market would say, okay, it's really falling out of bed. We keep hearing that all these companies are trimming jobs. Now here's this number. What happens if February gets even worse? Will that get the Fed to move quicker? Tomorrow's a big day. Don't underestimate the impact of the report tomorrow. When you come to the NASDAQ, no, this was the sweetheart market, and it not only lost the embedded reading yesterday, right here, and by the way, I was in this market and had my clients, via my recommendation, they lost back some money. We had a great month, but we gave back something yesterday. Now, was it going to keep it or not? Well, no. And yet, after the close today, if you take a look at Meta, up 15% in the aftermarket. Apple's not doing as well. Early on, it was down 2% as they're feeling the crunch as to what's going on in China. They claim that the watch sales are going strong, even though they don't have that oxygen sensor, and they're not going to get it. They're not going to apparently pay that other company for the rights to it. Okay. Vision Pro might be something down the road, but it's not going to be a shakeup for the company right now. And I keep looking and saying, okay, but most of the mega companies are doing just fine. And we have more of them reporting, so we're nowhere near through with all this. Then we get over to the Dow. It kept its embedded reading and it took over leadership as far as I'm concerned. Remember, so far, you lost the bullish reading in the S&P, you got it back. You lost it and kept it lost in the NASDAQ. You never lost it in the Dow, so it's the bull leader. But it too, if you think about this market, just to give you an example as to the vicious two-day pattern, this was where you were on Wednesday. You lost 332 points. You made back 345 today. Duh, I feel like a beginner in the market. I didn't see that coming. If you thought I did, wrong. I didn't see that coming at all. And the market is flat tonight, but still bullish. Last, we come to the market that's the weakest of the group. And it is the Russell. And it broke, it made back what? I'll prove my point to you. Let's get to Wednesday. The market down Wednesday, 50 points, up 26. You only made back half of it today. That's the point I'm making. The other markets, it's like, whoa, what happened? How could you lose that much and get it all back? 1, 2, 3. So be aware of that. You're at, in the 10-year note, the upper Bollinger Band. You're overbought. At any point now, you can pull back a little bit. The market, I think, is ahead of itself. Could it run further? Anything can happen, but 95% of the time, you'll stay at the band. And when you're overbought and you hit the band, which you did today, Thursday, be careful. Market often likes to back off. Same thing from the 5-year note. And of course, you'll be looking at the 10 and the 30. You got to watch the whole thing. Now in the dollar, wild day today, down 21 points. But look at the action here. You're fighting a major battle at the 18 and the 200-day average. Should this market close lower tomorrow than this and turning down, I want to show you something. Were we embedded? If we come back to, here is Tuesday, both numbers over 80, both over 80 on Monday and Friday. So you lose the embedded reading on Wednesday. Do you get it back today? No. Where does the market go? Right where it should. The 18-day average to fight a battle now as to what it does. And it's sitting here waiting on the jobs numbers. What does that mean for the euro? Well, the euro went down, has been playing for the better part of a week against the 100-day average in green. Now it's coming up to challenge the 18. If it can clear the 200, 109.42, that could get interesting to the upside. Tomorrow's going to be important. Would you even know there was today the Bank of England? They did nothing. They sat pat as the market expected. You're overbought. You are stuck in churning. So the people that are buying for the breakout to the upside, they're getting thwarted each time. They're not getting it. The same guys that are trying for the downside are running into the Bollinger Band. It's getting thrown back. And you've gone nowhere for the better part of all of January and now early February. Eventually, it'll break out one way or the other. In Bitcoin, as everybody was super bearish down here and we lost here, and I said, be careful, you're turning back up. I don't know that you're going any lower. I think that's about it. I think that the 38,000 level for that break was it. There'd have to be another event. Do I see anything bullish? Not yet. I see a market that is fighting to be bullish against the 18-day average. That it is trying to do. You can't argue that it doesn't have a higher low, higher high pattern. The key is, can it get away and get over that 43,000 level to try to mount something? Brent versus WTI. The one thing that continues to happen is that the Houthis continue to send the missiles. They don't care about the coalition. If you saw today, our Secretary of Defense went on, Lloyd, that's name Austin, and he was talking about, we are going to do blah, blah, blah. Well, already Iran has told all the surrogates, hey, America's coming. They're not attacking Iran's property. They're coming after you. Why don't we move all of our Iranian people out? And where you can hide your missiles or whatever infrastructure that's mobile, move it away because the U.S. is coming there, and let them have the fixed targets. And that's going to, I guess, scare the heck out of everybody. Whoa, you think that's the case, that's going to happen? And yet this is the Biden plan. Biden is so petrified about starting a war with Iran that he tells them the only thing we haven't done is giving them dates, time, and location. And I think we should. If we're giving them everything else, you might as well do that. And that way we don't have to worry about hurting anybody. Okay, we can take out the land. We don't have to kill one person in doing that. When we look at the Brent, we are back down to neutral. Now, they are overproducing. I wrote in my report and showed the facts on the Brent. I did a detailed study today about it. And OPEC does not have control of everything. In fact, had it not been for Libya and losing about 300,000, 400,000 barrels a day recently in January, but now, as I understand, the groups are coming back together, they'd have been about 500,000 barrels a day too much. So right now they're still there. While Russia did cut back on certain amounts, it's overproducing in gasoline. And it's sending that abroad. That's part of what their restriction is on. In plain English, it's hard to get everybody to make the cuts now. They're not going to be putting on more production. And they said, you know what? We'll kick the can down for the March meeting. And that's what they're going to do. So they're letting everything sit. The marketplace is pretty neutral here to bullish. Neutral to bullish. You have to take these numbers out to turn bearish. So you have a pattern of higher lows, higher highs. You fought a battle right here at the combination of the 100-day average and the Bollinger Band. I kept saying that's where I think the pros are coming out of the market. The support is right back here at the 200-day average in the 18. And today was the first day you came back to challenge it. And I think from here it gets interesting. The bigger bulls are probably buying the market here with stops under this low, seeing if they can kick it up again. WTI is the same thing. They're just tracking each other. You've gotten away from an overbought condition. This is where the market's trying to hold. The resistance will now be the 75.42 level. If the market takes out this low here, then the game changes and you open the panel up to go from where you're at, maybe $3 lower. Excuse me. So I'd be very cautious with that. Heating oil has actually turned the swing line down, but the bias is up. Whenever you're over the 18-day average, your bias is up. When you're under it, your bias is down. The first real resistance, as I see it, was right here. Did you get over it? Absolutely. You rode the Bollinger Band higher. And then when you came down, you found support there. You've still been doing that. So what had been the first resistance point didn't last that way very long. It became a support point, and it still is. Yet momentum is turning down on you. So you've got the trend down, momentum down, the bias up, and you're at a number that's trying to support the market that's normally a resistance number, which is the interesting thing, the 100-day average. I don't know what to do with that. Nat gas, I remain in the bear camp. Next week, the hearings begin at the House of Representatives. They're bringing in all kinds of pros. I think Donald Tusk is going to speak for the Department of Energy, giving you all the reasons as to the Biden administration's beautiful idea on hurting our allies and not allowing any more natural gas production, even though the U.S. is producing a record amount of oil, and that means we're getting all that natural gas. So I guess, what do we do with that? All right. I guess under the Biden administration, the best thing we could do is stop producing oil. The air will get clean. Then we can buy everything from the Saudis and Qatar and maybe Iran. We can become friends with them. So the blend of this is going to be, and my point is, and I am being facetious, it's going to be a clown show watching how the Department of Energy tries in front of Congress to bring this up and fight the congressmen that are going to ask intelligent questions. Why are we doing this? It has nothing to do with voters that buying the votes for the Biden administration at this time. Don't we have a war? Didn't we tell all our European friends, don't buy Russian gas? We'll help you make up the difference. Now we want to shut it off. And they'll say, we're not shutting that off. Not at all. You can keep selling them that. It's new production that we are going to do. It's going to be fun. That's my point, all right? So be ready for it and sit there with a smile. Now, I want to remind you, you can get a lot of our information. When you go to our free offer site, you're going to see the page will come up just like this, and it teaches you. Just click the blue line, and you pick what you want. Then everything's underneath it. You click away, and it puts it in a shopping cart. Everything here is free. Different courses, our charting software. Try our charting software. It's so much better than what most of you have. Give that a try. When you're finished, you put in your name, your email address, the information. We will send you an email with all the links, everything you need. Up and away you go. Our information, our research and all is yours free for 2 weeks to give it a try. No obligation, no credit cards, none of that. And you will see, you can get your guide to technical indicators. You're going to be able to play with, I think one of the interesting things is the Arun indicator. People don't understand time and price, how that works together and how they break apart, and you get ideas. Am I confused in the markets right now? I probably won't be after I see the jobs report, but at this point, to a degree. I'm Ira. You have yourself a good evening. I'll catch up with you all in the morning. Take care.